Hello and welcome to day 6 of the Profit Series. The Profit Series is dedicated to helping you as business owners to make and keep more money in your business so that you have more profit at the end of the week, at the end of the month, at the end of the quarter, at the end of the year. So, yesterday, what we talked about is we reviewed that in order to get out of this client payment to client payment cycle, we had to first get a cash injection. I went through that in Profit Series number 3 and 4. Then we had to start using a different model and establish a new habit, which is creating more profit in our business and making sure the decisions we make result in more profit in our business. And we started talking about that yesterday and the formula for creating more profit in our business, which is sales minus the profit that we want to have equals the expenses we're able to spend, right? So we know how much we brought in. We need to minus the profit we want to have, like paying ourselves. And then that equals the amount of money we have left over to put towards expenses. Now, here's something brilliant that I want to share with you guys today is what's called the Parkinson's Law. When I was studying psychology, I learned about the Parkinson's Law, and I have seen this for many years since I've graduated college, that this has played out to be true. Parkinson's Law was created by a historian. His last name was Parkinson. It was C. Parkinson. I can't remember his first name. But basically, his theory was that whatever the demand is for our time, we will meet it. Right? So, for example, if we have a project and it's due in 2 weeks, and this certainly happened for me in college, if I knew that I had a project to do or a paper due in 2 weeks, I used 2 weeks to do the paper. If I forgot that I had a paper and suddenly it's due in 3 days, I got that paper done in 3 days. If I had a final at the end of the semester, how long do you think it took me to prepare and to study for that final? It took me the whole year, or last minute, right? So the theory is that whatever the amount of time, whatever the amount of resources that we have, we will use it up within that time frame. So for example, if we have $1,000 to complete a certain job or assignment in our business, we will get it done for $1,000. We will figure out our way. Our brain knows how to find solutions and to make it happen, to sacrifice other things, to make certain cuts, whether it's our time or our money. We figure out how to make it happen with whatever the allotment is that we have. That is Parkinson's Law. Right? Can anyone relate to that? Maybe you're a procrastinator and you've seen that in full effect in your life, but it happens with the money in our business as well. So this is why the sales minus profit equals expenses formula works. Because if we made, for example, $20,000 in our business and we wanted to have a profit of that of $10,000, now we know we have another $10,000 we can dedicate towards expenses. That could be team, taxes, savings, investment in opportunities, right? But we know that we have $10,000 to allocate to that, and that's it. No more, no less, because we've already put the money for the profit. The other 10K we already put away towards the profit of the business. So this is just an example of how Parkinson's Law works, because here's what business owners end up doing. They do bank balance accounting. Okay, I'm guilty of this as well, mostly because numbers have not always been my favorite. I've come to love and appreciate numbers, but looking at it, we get overwhelmed when we look at our balance sheet. When we go into our bank account and we look at the statements and we look at the cash flow statements and all of this stuff, right? Unless you're a numbers nerd, which I am not a numbers nerd, we kind of get overwhelmed, right? And we get the glazed look in our eyes. So what we end up doing is we just look at the balance. We look at the bank balance, and that's how we figure out what's left over. So we look at all these things coming in, going out, and that kind of blurs, and we just look at what's the bottom line. The bottom line is at the end of the month, I have $1,500 left. Okay, that's my profit for the month. No, that's not the way to do it. So again, with Parkinson's Law, we will consume whatever is in our bank account. So think about that for a second. If you see a balance of $1,500 or you see a balance of $20,000, you will spend it because it's Parkinson's Law. Whatever the amount of the resources we have, we will use it. That is the container that our brain has to work with, and it's going to use it up. So using the profit first model, that encourages us as business owners um, to take the profit out first and allocate that money to other accounts, right? So that we can see exactly where we land instead of doing this bank balance accounting. So that is how we can start to shift these habits. And tomorrow in the next profit series, we're going to talk about actually how to use the habits we have for us instead of trying to make a huge shift in our habits. We're going to talk about how to leverage the habits that we have. So tomorrow I look forward to talking to you about that, and I will see you on the next profit series.